Holy smokers, folks, this ain't no dang jokers. You know, if I'm recording a video in the middle of the desert in a hotel room, you know there's drama in the market. Oh my gosh, do we have drama, folks. We have Dow Jones Industrial Average absolutely plummeting right now. S&P 500, NASDAQ as well. NASDAQ's down over 4.5%. Oil's under $60. Yes, you heard me right. A barrel of oil's under $60. The lowest price we've seen in quite some time. 10-year sinking again. We're looking at Bitcoin absolutely plummeting right now. Ethereum plummeting. Solana, everything across the board. It's going to be a Red Dead Redemption open out there tomorrow. So a few things I want to speak about here in this video, okay? First thing is Trump did respond in several different ways in regards to the whole market fall here. I want to speak about that, kind of share my opinions and perspectives on this whole situation because, you know, I think it's important to understand where he's at in regards to the tariffs, in regards to this market fall, this market volatility, all of this, okay? Then what we're going to talk about is, you know, I think this is a subject worth addressing, you know, if people have lost faith in Trump or not, which, by the way, I would love to hear in the comments section from you guys. If you voted for Trump, have you lost faith? If you did not vote for Trump, or have you lost more faith? I would love to hear in the comment section kind of your guys' perspective on this, right? Because obviously this is a whole tariff situation, but this is even bigger than Trump in regards to this market fall. And you got to understand the mechanics behind what's going on in the stock market right now, because this is bigger than just Trump and tariffs. That's no doubt the massive situation here, right? But there's a lot going on beneath the market in why this market's melting at such a rapid clip. It's bigger than just Trump tariffs, and you got to understand what's going on there, okay? And then from there, what we're going to get into is a bunch of stocks that are easy buys this week if you have any sort of longer term horizon. And I'm telling you, there's a lot of opportunities, okay? By the way, I hope you guys appreciate me covering this video for you guys in the middle of the desert in a hotel room, okay? Because I was not planning on doing a video, but I'm like, there's no doubt with this drama going on, there's a lot of people that want to hear my 2 cents on this because, you know, after Friday, a lot of folks are like, this has got to be wrapped up in regards to this correction crash, right? We got a NASDAQ in bear market. We got a Russell in bear market. In severe bear market now for the Russell. And nope, we're not quite over. So yeah, appreciate y'all joining me. All I need from you, smash that like button. And if you want to subscribe here to this channel, you can certainly subscribe. Yeah, okay. So where I want to get started here is Trump's response. Okay, here's what happened. So this came out just about a half hour ago. Trump has said that he will not make a deal with China unless a trade deficit is solved. As he was interviewed, futures market continued to fall. The NASDAQ futures down over 6%, nearing circuit breaker levels. Now, here's the deal, okay? Listen, Trump seems committed, at least in the short term, to tariffs and everything that comes along with that, which means the market in complete free fall and crashing right now. With that being said, do understand this. Just because you're committed to it over the next month, over the next couple months, does not mean you're necessarily committed toward it for the next 4 years. Could be. Maybe maybe the tariffs he announced the other day, maybe that's on for the next 4 years, and that's that. Or maybe this is just a big game of negotiation. You got to understand, if Trump wants to win the negotiations, he's got to act like, I don't give an F about what the market does right now. We can free fall this thing. That's fine with me. The tariffs are more important. He's got to act like that because otherwise countries aren't going to take him serious in terms of getting his way, right? They're going to be like, oh, you're just going to get scared. The market goes down. He needs to be able to look this market in the face at a complete crash and be able to say, that's fine. Because then people actually say, wait, is he insane? Is he serious? Is he serious with this? He's going to let the market completely crash? Well, shoot, like maybe we should do something about this. Like maybe we are going to have to negotiate because this man's the first president in history that's like, go ahead, have a crash stock market. Like, and that's a pretty wild stance, right? Because usually presidents try to do almost as much as possible to have the stock market go up. And a lot of people got that assumption, you know, from his first term. Listen, let me be very crystal clear. And I've tried to educate people over and over again about Trump and about what this second term is going to be. And if you haven't been listening to me, I hope people finally start listening. Because I covered this months ago on the channel in a video called The Trump Stock Market's Going to Be a Roller Coaster or something like that. You can look it up. Go back and watch that video. Listen. I hope people are listening finally. Okay. When Trump was in the first term, you got to understand, we had multiple insane volatility cycles. 2018, we had a ton of volatility in early 2018. And then we had an insane amount of volatility at the end of 2018. I'm talking tech stocks were in complete free fall at the end of 2018. And people forget about that, and some people weren't in the market, so they didn't even know about it. They weren't paying attention. Like, I was too young, or, I wasn't really in the market back then. Respect, I understand, okay? But I can tell you, for all of us that were in the market back in 2018, that free fall at the end of 2018 was scary. We were on pace in December. We were on pace to have the worst December since the Great Depression. No one knows that unless you were in the stock market back then. I remember it very well. We were about 21 or 22 days in that month of December, and literally we were on pace for the worst December since the Great Depression. It was insane. And then at the very end of December, the market started to come back. And then 2019 actually was a great year for the market. People forget about 2018. 2018 was insane, okay? Listen, did you forget 2020? Did you forget 2020? No, people chalk that up to just being a Rona crash. Respect. But we don't know what could have happened in 2020. We could have had a market crash regardless of 2020 happening or not. We don't know how that year would have played out, right? But we do know we had the fastest stock market crash in history. So we had the fastest, 30+% move in the S&P 500 we had ever seen. Additionally, we had, 2018 was absolute pandemonium, absolute insanity in the stock market. So people thought like Trump getting in office was just going to mean the stock market goes up every day. I have news for you. That's not the way this works. That's not the way the second term's going to work. There's going to, as I explained in those videos, months ago, there's going to be some moments in the stock market where it is like, this is the greatest stock market ever. Trump's, national hero. This is like, we just make money every single day. And there's going to be some moments over the next 4 years, and we're going through one of those moments right now, that is absolutely like, what is Trump doing? He's insane. He's crashing the stock market. It's all his fault. We're going to be going through that. And so I hope people are finally listening to this now, because I explained this all to folks months ago, and not a lot of people listened, unfortunately. And I hope the people that were listening months ago, like, you get it. You understand this game, right? Now, next up here, Trump said this very recently, as in, just minutes ago, right? By the way, Sam Solid, I see you. He added me. Holy smokers, he said, to the market right now. Got Prince flipping flapjacks, baby. I like it. Respect. We have massive financial deficits with China, the European Union, and many others. The only way this problem can be cured is with tariffs. That's what he believes. At least that's what he's saying he believes, right? What he believes and what he's saying he believes, they could be two different things. But the moral of the story is, people are like, crap, he's serious? Like, he really believes like the only way this situation is going to be fixed is for tariffs? Which is now bringing tens of billions of dollars into the USA. Listen, like, tens of billions of dollars is almost like a joke number. Like, if you're talking anything government-wise, you're talking trillions. And we have trillions of dollars being wiped out of the U.S. stock market right now. Trillions. So tens of billions of dollars it's literally like almost worth laughing at. Like, I saw it and I started laughing, literally, because it's nothing. They're already in effect, in a beautiful thing to behold. The surplus with these countries has grown during the presidency of Sleepy Joe Biden. By the way, a lot of people wishing Sleepy Joe Biden could be back. He was just eating ice cream, and people like that, man. We are going to reverse it, and reverse it quickly. Some people will realize that tariffs for the United States of America are a very beautiful thing. So, what is the important part of that right there, and what does it mean for the stock market? The important part of that is Trump tripling, quadrupling, 5x downing that tariffs are the way. Tariffs are the way. In the stock market's like, are you freaking kidding me? Like, this guy's serious? Sell. Like, he's really serious? Tens of billions of dollars. People are like, who cares? Who cares? We have trillions of dollars of wealth being wiped out on the stock market, right? Like, trillions, not like tens of billions, no, trillions, right? People have, just in the past 6 to 7 weeks, people's portfolios are down thousands of dollars, tens of thousands of dollars, hundreds of thousands of dollars, millions of dollars, tens of millions, hundreds of millions, billions, and some people, tens of billions of dollars, depending upon how much money you have. For a lot of myself and a lot of the higher net worth individuals I know, we're talking, and I'm in a hotel room, I don't want to talk too loud, okay? But we're talking, I know several people personally that just on Thursday and Friday were down 7 figures or multi-7 figures, okay? What do you think I was down between all my portfolios on Thursday and Friday combined? Look at the public account alone. The public account alone was down, on Thursday, Friday, the public account was down what? 400,000 plus? Or 500,000, something like that, somewhere between 400 and maybe 500,000 on a 2-day span. That's just a public account. That's not even adding up all my other portfolios, and that's in a 2-day span once again. Now take that across all these different investors, and you start to see just net worth just falling off a cliff. And along that, what happens? Purchasing power goes down immensely, right? Because if you got a big portfolio and you want to take money out to go buy a new house, right, and put a down payment on it or whatever, you think you're going to do that now? Heck no, you're not going to do that now. Give me a break. Your portfolio's down massively, right? Or a car or something like that. But the other thing comes with that is decreased confidence. No doubt about it, right? People see plummeting stock market, they see the portfolios going down, and they start saying, I don't know if I want to go on that vacation now. I don't know if I want to do this. I don't know if I want to do that. So it's an all big game, right? And that's what we have going on at this point in time. By the way, if you want to see a battle, go to my X. I don't know if you guys follow me on X. I'll put that as, one of the pinned comments down there today, okay? It's also in the description area of all my videos. If you want to follow me on X, I've been active on there, especially during this whole market situation the last few weeks. I've been as active as ever on X. But if you want to see some craziness, I just posted this a little while ago. It already has 135 comments. It said, stock market crash drama continues. Are people that voted for Trump still believers, or have you lost all faith? Let me know in the comments. So if you want to see some craziness, you can go to my X page. No, something I posted that's very valuable is I just posted this a couple days ago, okay? You got to understand what's going on beneath the market. People are like, Trump, tariffs. That's what is getting the market drama, but the reason the market's selling off at such a ridiculously rapid rate is bigger than just Trump tariffs. That was just like the fuel for the fire. But we have like a massive amount of extra fuel being thrown on the fire, essentially, that is beyond Trump tariffs. And that's this. And you got to understand this because this is very important, okay? Do you guys remember what I was showing you back in January, February? I was showing you guys back then margin charts. And margin had been going to pretty insane levels. Now, when margin starts getting really, really high, to really high levels, like we were at the highest margin we had been at since the peak of the market in 2021. And what happened right when we hit those numbers? Market tanked. And we had a colossal sell-off in the NASDAQ in 2022. Some people forgot 2022 happened. Did they forget the NASDAQ fell 37% peak to trough from 2021 highs to 2022 lows? Did people forget that? 37%? We haven't even fallen that much yet. NASDAQ, if you add up what is down from the peak plus what it's down, pre-market, we could say 27%. We could talk 10 more percentage points just to get to the 2022 drop. But margin went crazy. So people see margin going crazy. Oh my gosh, there's $900 billion of margin taken out. They think retail. They think that's all retail investors. You think retail investors are doing $900 billion of margin? You think that's just a bunch of, people on Robinhood in their mom's basement with $5,000 taking out another $5,000 of margin? You think that's them? Stacking up $900 billion of margin? Then I have news for you. It's not. It's big dog money. It's big dog money. Hedge funds. And what do we see? Hedge funds hit with the steepest margin calls since 2020 Rona crash. Now, a margin call is essentially, so, you take out extra money, debt money from the bank, essentially, or your brokerage or whatever, right? And essentially you invest that money. Well, just like an individual can do that, hedge funds do that as well. And hedge funds usually go through big banks to get these sorts of loans so they can essentially get even more market upside. Now, what happens is these hedge funds a lot of times fall into the same exact trap that a lot of newbie retail investors fall into, When the market's at all-time highs and they see nothing but good things, they start going margin because they're like, oh my gosh, there's so much money to be made. The market's green every day. What if I had even more money to invest? Instead of $100,000, I could have 200. The same exact thought process happens with Wall Streeters and hedge funds. They do the same exact thing at the worst possible times. And they start loading up and they say, we only got $1 billion around to invest. I want $1.5 billion. Can I get a $500 million loan? And they got all the connections with the big banks. The big banks will say, okay. But then when all of a sudden the market starts selling off, the banks start calling in those loans because they're like, there's too much volatility, it's too much risk to us. We're afraid we're not going to get that money back from you. Margin call. And the same thing that happens to a retail trader that goes way too crazy on margin and gets it wrong, the same exact thing happens with hedge funds. And it's usually when they're caught very off guard. It's usually in a time period where they think it's only good things, and then something out of nowhere just comes, a black swan type event, and just wrecks everybody. Guess what Rona was? Rona was that exactly, like most of these hedge funds weren't thinking like that could happen. And even if we go back to the 2021 market, you know, a lot of people were thinking like it was just going to be good. Then inflation went so out of control. The Fed had to start raising rates. People were like, oh my gosh, I didn't think the Fed was going to start raising rates. Panic, panic, panic. Next thing you know, margin calls, right? And that's exactly what we have. If you go back to January, almost every Wall Streeter that went on CNBC, Bloomberg, all the big financial publications, if we went back to January, oh my gosh, almost every one of these guys was so positive. It was only up. There was no risk to the market. None of them were talking about the type of stuff I was talking about with margin being out of control and valuations being out of control, right? I covered it all on the channel. I was taking profits on Tesla, taking profits on Palantir. We covered it all, right? And these individuals just thought everything was just going to go up forever. They start taking out margin, and now they're getting margin called up to you know what. And I posted this. I said, all these Wall Streeters have the effing audacity to call retail investors dumb money. Enjoy your margin calls, Wall Streeters, as dumb money are picking up countless great stocks at 52-week, 2-year, 5-year, 10-year lows while you're all being forced to sell. And that's exactly what we're doing, right? These guys are forced selling going on right now. They're getting margin calls. And the thing that is crazy is the margin calls lead to what? More margin calls. Because essentially, if everybody's being forced to sell, all these Wall Streeters are being forced to sell, right? It leads to more margin calls because then banks say, you know what? We want that money from that fund over there. Get that money back. Then they're forced to sell. And then the next fund, and until you get to a place where, you know, like margin's been called in essentially, and the margin amount drops by several $100 billion. That's what we're going to witness. If you're going to look at where margin topped a couple months ago versus where margin's going to be a couple months from now, you're going to see a several $100 billion drop. That's my prediction. That prediction will be accurate. You will see a several $100 billion drop in the amount of margin outstanding. It's going to be insane. And so it leads to a much healthier market. And then you actually, a lot of people wonder, why do you get these V-shaped recoveries in the market where the market just plummets off a cliff and then comes back strong? A lot of people think, oh, it's just the Fed. No. It's because when you go through one of these bouts where the market just goes down straight line, it's because you have everybody that wants to sell is all getting out. They're all going to the exit door at the exact same time. Imagine essentially we got one door to go through, okay? It's just a normal sized door, like at your house, okay? And we've got 1,000 people that are all trying to go through that door at once. What is it going to be? It's going to be mayhem. It's going to be a mess. People are going to be getting squished. They're going to be trying to fight over who goes through the door next. It's going to be a whole situation, right? It's exactly what happens to Wall Street. They're all trying to get out of the exit door at the same exact time, and it's a complete mayhem. It's complete mayhem. That's what's going on in the market right now. And then, finally, everybody that could have possibly wanted to go through the door has finally gotten through the door. And then a few people start saying, you know what? I think I'm going to go back through that door the other way. And then a couple people go through fine, a couple more people go through fine. Then it starts being a little bit of a stampede, but people are still going through fine. And the next thing you know, it's mayhem, everybody going through the door at once. That's the moment we call blow off tops. When you got stocks trading at ridiculous valuations, going to new 52-week high, new 52-week high. And that's the sort of market we get into sometimes, where it seems like every single day you wake up, you make $5,000, you make $10,000, you make $20,000, you make $100,000. And you're like, my gosh, this is just so easy. And that's the market when people start questioning their jobs. And they start saying, why am I even working? I make more money every day from the stock market than I do from my job. Like I make 10 times the amount from my portfolio than what I make from my job. Why am I even working anymore? And that's the market we were in just a few months ago. See how fast things change? And now we're in a market that's completely the opposite of that. And people wake up every day and they're just like, oh, my portfolio's down huge again. It's down huge again, down huge again, down huge again, right? And then you get these insane V-shaped recoveries, right? That just are incredible. The V-shaped recoveries are ridiculous in how powerful those are on the other side. And that's why the timing of the market game is impossible. Because what happens is you'll get sometimes a day where the market goes up or down. Then people are wondering, like, is that a real rally or is that just, going back down? And then sometimes you just go back down, right? And you hit a new low. And then sometimes it doesn't go down. It just goes up, up, up. And people are like, it's not the real rally yet, right? And then it goes up, up, up. And they see a bunch more bad news. And they're like, the market's going to have to go down this week. It's bad news. And the market doesn't go down. It keeps going up. And they're like, what the hell? Why does this market just keep going up? I need to get back in the market. And they keep waiting, keep waiting, keep waiting. Next thing you know, the S&P 500's already popped 20%. And they're like, okay, I guess I just got to go in now. And then they finally get in. So understand the dynamics in the market that's going on. I think it's very important for everybody out there, right? Because it's a whole situation, man. It's a whole situation. Once again, if you want to follow me on X, I'll put that as pinned comment down there today, and it's also linked in the description. Now, what are some opportunities out there in this market, okay? First off, there's a lot of opportunities in this market. There's some opportunities I don't even have on this list. Like Meta's a great opportunity this week, and Amazon's a great opportunity. I don't have either one on this list just because, I'm still interested in Amazon and still buying it, but I'm not buying as much just because I already own so many shares, and then Meta, I own a ridiculous amount of shares. But Meta and Amazon are easy pickups this week. This is actually a 2x leverage on the Russell 2000, or 3x leverage on the Russell 2000. This one here, URTY. And if this baby breaks 20 this week, I think it could be really compelling, as long as somebody's got a longer term horizon ahead. MU, if MU goes under 60, buy. MU, anything under 10, screaming deal. EL's a screaming deal here, but if that baby even goes under 50, it's just stocks are starting to get a silly price, and this is sort of market people start saying, like, it's all going to zero, whatever, okay? AMD is silly at 85. You might get some shares this week in the 70s, literally. Like, and I know it's ridiculous, but you got to understand, we're in a market right now where the Wall Streeters and the sellers, they don't care about valuation. They don't care about the future. They don't care about what tech these companies have. They don't care about anything right now other than sell. When you're getting margin called and you've got to sell $500 million in stocks, you've got to sell $500 million in stock because you're getting margin called. Do you know how much the technology of a company matters and the income statement, the balance sheet? Zero. All that matters is you have to sell. You have no choice. It's not an option. If JP Morgan comes to you and says, you have until Wednesday to liquidate all these stocks here, you don't have an option for that. You either voluntarily do it or they will do it for you. There's not an option. And so you got to understand, right now, what you're seeing in the market at this point in time has nothing at all to do with fundamentals. The first part of this market drop, that had something to do with fundamentals. That was really around, what's going on with tariffs and all that. This part of the market drop, this has nothing to do with fundamentals now. We're now in the stage, like we were a few months ago, when people are willing to pay any price for any stock. And you couldn't talk to people about a forward P ratio or a P ratio. I don't care about that price to sales ratio. I don't care. I don't want to listen to that. That's the market we're in now. but it's on the flip side. It's on the downward momentum side. And so do understand that's very, very important. So AMD, you might get shares this week in the 70s, and that's insane. That's insane to think AMD with their product roadmap and where that company's going over this next 5-10 years, that they're selling it down to probably maybe the 70s this week. Crazy, man, crazy. Etsy, Etsy's actually intriguing to me, especially if that baby goes under 40. Fubo, steal deal. Trade Desk, I've looked into that business model, and that's another one that I would love to maybe start a position in this week. It's likely going under 45, and it might even go into the 30s this week. Trade Desk this has been a historic fall for this stock, down 63% from kind of the beginning of January. Insane. PayPal's in the 50s for PayPal. Come on. Adobe, oh my gosh. I think people that are buying Adobe over this next couple weeks are going to be very happy in a few years. Oh my gosh, are they going to be happy campers? That stock is a steal deal. I'm probably going to have to start a position this week. My issue is there's so many opportunities out there in the market this week. It's like, this is a buffet. That's the thing. When you're in this part of the market, the problem is not the stock market going down. The problem is there's too many stocks that are too many opportunities. You start to look out there and like, dang man, I want to buy this stock. I want to buy this stock. I want to buy this stock. I want to buy. You start looking out there and you're like, oh my gosh, there's like 50 stocks I want to buy right now. And then you have to decide where are the 10 or 15 best opportunities of that 50 stock. There might be, honestly, there's probably 100 stocks that I would gladly put in money into right now because they're huge money makers over the next few years because they're trading at ridiculous valuations. But the question is, where's the 10 or 15 best opportunities? What's going to make me the most money over the next 3-5 years after this market crash is over, after this bear market's over? What's going to be the biggest opportunities? So that's the hard part. The easy part right now, because you're in a sort of market, when you're in a crashing market, honestly, you could throw money in 70% plus of stocks. When you're in a market crash, you could throw money in, I don't want to say everything, but almost everything, and make a lot of money over the next couple of years as you come out of it. Look at the great financial crisis. You could have bought, from basically the second half of 2008 through the second half of 2009, you could have bought almost any stock and made a bunch of money over the next couple of years after that. You could have bought almost anything, right? But there were certain stocks that went up 5x, 10x, 20x, 30x over the next few years coming out, right? So that's where you kind of got to figure out when you're in a crash, like where's the very best opportunities? And I got to go after those. Because when you're at a buffet, imagine you're at the Wynn buffet, right? Beautiful buffet. And you're just like, oh my gosh, everything looks good here. And I can eat as much as I want. But you only got so much room in that belly to put that food in. And so you got to pick the very best things. So you're going to go after the prime rib. If they have some lobster tails, you're going to go after that, right? They got some king crab, which they probably aren't, because king crab, they don't keep those at the buffet anymore. You got to ball out for that. If they got the crab legs, you're going after the crab legs, right? You're going to go after that sort of stuff. You're not going to go after the bread. Otherwise, you've probably never been to a buffet before, right? And so that's the same thing in the stock market right now. Oh my gosh. Middleby could be interesting. Wynn's going to be in the 60s this week. If this market continues, Wynn's going to be in the 60s. 60s for Wynn? Guys, let's think about this just practically for a moment. Let's just think about this, right? If we look at Wynn in the Rona, or in the Rona crash, right? Where'd Wynn go down to? Guys, look at this. Wynn went into the 40s during the Rona crash. Let's just think about this logically for a minute, okay? You see it right here around $48 March 30th. So maybe the low, at the absolute low, was a little lower than that. Maybe it got down to 45 or so, okay? I can't remember the specific low for Wynn, but let's just say it was 45. Heck, it could be 40. It doesn't matter, okay? Wynn's going to likely be in the 60s this week. Is this even remotely comparable to Rona for a stock like Wynn? No, because you would understand in March of 2020, we were talking about global travel being closed for years. Years. Not days, not weeks, not months. Years. That was the level of fear. We gonna get Win in the 60s, not that far from where it was in March of 2020, because of a trade war, because of tariffs. Come on. Like, those aren't even comparable things at all. At least Win can do business. Like for a company like Win, they will gladly take a recession any day of the week over their properties being forced to be closed for years. You understand, Macau properties for Win were limited open for years. And even when the Vegas properties opened back up, they had to limit how many people could stay there and how many people could be there. All that stuff. That's ridiculous, man. We're talking no money coming through the door. $0. Imagine for a business, you got a payroll and you're allowed to make $0. Come on, man. Come on. And then when they did open the properties back up in Macau, honestly, long term, it was a good move that they opened back up those properties. But I can tell you, short term, they lost a fortune by even opening back up those properties because they had to pay all the payroll and they weren't allowed to have enough customers to even come close to making a profit. You would gladly take the trade war over your properties being forced to be closed and you still got payroll and corporate to pay and you got $0 of revenue coming. Even during a recession, at least you still got good money coming through. It's better than zero. Anything's better than zero, is it not? Right? Red Rock's down to $37. That one we could see that under 35. That's a steal deal. Google's well under 150 now. Maybe it goes under 140. That one's a steal deal. Could Honest hit the threes this week? It's possible. And that one's a steal deal. I mean, my gosh, it's just deals everywhere. I like Hershey's here. RH, I'm still a little scared of. I have it on my possible buys watch list, but I'm if this thing really goes south, you could see RH at $50. I wouldn't bank on that, but if this really went south, there could be a lot more pain for a stock like RH. You got to understand that. Cheesecake, give me a break. $45 on cheesecake. Come on. And it probably get it even lower, here in the short term, right? There's just opportunities everywhere. Whirlpool, I mean, that would be a stock I would love to start buying. Listen, you know what's happening to rates right now? Rates are getting killed. The 10-year is coming down immensely. By the way, Elf's a steal deal. Oh my gosh. Could we get Elf under 50? This is insane. Nike's a steal deal. Easy. These are easy money makers over the next few years, right? Short terms is what the short term is. Who cares? I don't care. If Elf goes to $42, whatever. Nike goes to 51, whatever. I don't care. All I care is that Nike's a lot higher 3 years from now than it is today. Elf, all those sorts of stocks, right? But when it comes to a stock like I was speaking about in regards to Whirlpool, listen, rates are headed where? Down. Mortgage rates are headed down. I think the housing market is going to pick up substantially in terms of the amount of people moving in the back half of this year. And then 26 is going to be another pickup. And 27 is going to be another pickup. And so for existing home sales, what's going on right now is the best possible thing. Now, for selling price, this is not good. Because if people are going to sell homes over this next 6 to 12 months, they're going to have to cut price a lot from where they're at. So there's no debating that. But in terms of the amount of activity, it's going to pick up substantially starting in the back half of this year and go through into 26 and into 27. It's going to be like a whole stair-step situation there. Because we could be looking at mortgage rates, 6 months from now that are, in the low 5s or high 4s. In 12 months, maybe even lower than that, depending upon what happens with this market if Trump stays true on what he's doing here. And so that at the end of the day, that's going to be multi-year boom for a company like Whirlpool that's been dead money for years because the housing market's been frozen. We're going to actually unfreeze that housing market, right? And like I said, it's not going to be necessarily great things for selling price, but it will be great things for the amount of people moving because that market's been dead for years now. And when people move, a lot of people buy new appliances. It's just what happens. And that bodes very well for a company like Whirlpool, right? And so just something to keep in mind. I mean, but that's the thing, man. There's so many opportunities out there, and there's going to be so many opportunities. Until we get the hedge funds to be done with their margin call situation, we can finally bottom out this market, then we can flip to the other side. Alrighty, folks. Busy times, baby. Busy times. I'll try to keep you guys as in tune as possible with what I'm up to in the market. You'll likely see some big money coming in from me. And make sure you follow me on X because I'm posting a lot of stuff on there. And, man, fun times. Look at that NASDAQ down 5.5%. Look at that crude oil, $59. Oh, my gosh. 10-year looking good, baby, okay? All right, guys, much love as always, and have a great day.